If you want to start investing your money, but you're confused about the different options out there, you are in the right place. You hear about terms such as stocks, bonds, real estate, cryptocurrencies, and the list goes on. These terms appear like financial jargons. Next, you encounter a bigger challenge: where to start. So, if you find yourself trying to figure out how and where to invest your hard-earned money, we will break it down for you. It doesn't matter if you're just starting out or you're seeking to expand your financial knowledge, as we've got you covered. Let's get into it right away. Before we go deeply, let's start with a question. Why is it necessary for you to know about investment options? Well, think about it this way. You keep your money in a savings account. Sure, it may be safe, but what does it yield for you after a while? Just a little. In fact, you'd soon discover how inflation is eating away at your purchasing power. For example, if inflation is around 3% and your savings account is only giving you 1%, it only means that your money is losing value over time. In other words, the money you save today could be worth less tomorrow. That's where investing comes in. Investments can help you grow your wealth faster than inflation, thereby making it work for you when you need it. It can also help you reach your financial goals, like buying a house, starting a business, or retiring comfortably. But here's the deal. If you don't know the options you have, you might miss out on opportunities. That's not all. You can even make choices that don't align with your financial goals in a worse scenario. Going further, a lot of people shy away from investing because of some common misconceptions. Let's talk about a few of these myths right away. One of the common myths is that investing is only for the rich. Funnily enough, the myth is false. Investing is for everyone, regardless of how much money you have. With as little as $10, you can start investing. There are a number of mobile apps that make it pretty easy to get started. Another myth is that investing is too complicated. While we accept that investing can seem complex at first, however, the moment you understand the basics, it becomes much more straightforward. In short, you don't need to be a financial expert or have a degree in economics to invest. And the last myth we will address is the belief that you could lose everything if you invest. Although there is risk in investing, there are also ways to manage that risk by choosing the right investments for your comfort level. Now, let's walk you through some of the most common investment options. From there, you can see which ones might be right for you. Firstly, we'll talk about stocks. Stocks are shares of ownership in a company. When you buy a stock, you're essentially buying a small piece of a company. If that company does well, the value of your stock goes up and you can sell it for a profit. On the other hand, if the company struggles, the stock's value can drop. Stocks are one of the most popular investment options because they can offer high returns over the long term. However, they can also be more volatile, as their value can go up and down real quickly. Think of it like a roller coaster ride. Next, we move to bonds. Bonds are basically loans that you give to a company or the government. In other words, when you buy a bond, you're lending your money for a certain period. In return, the company or government pays you interest over the period. Bonds are typically considered safer than stocks, but they also offer lower returns. Therefore, if you're considering a more stable investment, bonds could be a good choice. Then we have mutual funds and exchange-traded funds, ETFs. Although a little bit different, both mutual funds and ETFs are like baskets of investments. Mutual funds, for instance, pool money from many investors to buy a variety of stocks and bonds. By so doing, you're spreading out your risk, as you're not putting all your money into one investment. This option is great for beginners since you won't have to pick individual investments yourself. There's a professional to help with that and manage the fund. And as for ETFs, although they are similar to mutual funds, They trade like stocks. They also offer diversification and are usually cheaper because they have lower fees. If you're seeking to invest in a specific sector or index, ETFs are a great choice for you. We also have real estate. Please like and subscribe if you like the videos and share with your friends and colleagues. Real estate is a tangible investment. It involves buying property like a house or land. It can offer steady returns, especially if you rent out the property. However, it also requires more upfront money and maintenance. Real estate could be a good long-term strategy if you're looking for something more hands-on. And the last one we will cover is cryptocurrency. While it's a bit newer investment option, it is also riskier. Cryptocurrencies like Bitcoin or Ethereum are digital currencies that have gained a lot of attention in recent years. The potential for huge returns is there, but so is the risk of big losses. The reason is simple. Cryptos are volatile. Therefore, if you'd be exploring this option, it's important that you carry out in-depth research. Now that we've covered some of the main types of investments, the big question is, how do you choose the right one for you? The key to choosing the right investment option is understanding your goals and risk tolerance. For instance, are you saving for a short-term goal like a vacation or emergency fund? Or are you investing for the long haul like retirement? If your goal is long-term, you can afford to take more risks because you have time to ride out the market's ups and downs. That takes us to the next point, your risk tolerance. Some people are okay with taking big risks in hopes of big rewards, while others prefer slow and steady growth with less risk. There's no right or wrong answer here, just what makes you feel comfortable. So you've got an idea of what kinds of investments are out there. How do you actually get started? First things first, you'll want to open an investment account. There are plenty of online brokers or apps that make it easy, even for beginners. Look for one with low fees and that offers the investment options you're interested in. Once you've opened your account, start small. You don't need to invest a ton of money right away. Just a little dollar you'd have expended on an unnecessary expense might be a way to start. Just select an investment you're comfortable with, and remember, investing is a long game and not a get-rich-quick money-making process. The goal is to let your money grow over time. One more thing, investing is something you'll want to keep learning about as you set off on the journey. The more you know, the better decisions you can make, whether by visiting websites like Investopedia or financial YouTube channels which offer tons of information. Continual learning will help you stay on top of your investment game. You can also read books, take a course, or stay updated on market trends. Finally, investing doesn't have to be overwhelming. By understanding your options and starting small, in no time, you'll be on your way to building a secure financial future. Thank you for watching. If you enjoyed this video, hit the like button and subscribe so you do not miss any of our exciting content. Bye for now and see you in the next one.